This is closely watched by traders because it can affect interest rates and investor sentiment about long-term economic stability. Donald Trump's One Beautiful Bill has officially passed both chambers of Congress. We could then look toward higher bullish objectives. We start to talk about this area located at 98.201. Welcome back, everyone. I'm Isaac Martinez, trader and market analyst at xChief. In today's video, we're breaking down the latest market action, including key technical setups on the dollar index, the S&P500, Euro, USD, and Bitcoin. With global tensions rising and major legislation reshaping the US economy, the charts are revealing powerful signals that every investor should be watching right now. Stay with me because what's happening this week could define the direction of the markets for months ahead. Let's start with the economic calendar. As always, don't forget the hours you are going to see are based on GMT -5, which is related to the New York trading session. This week, we'll be paying attention to several key events that could impact the financial markets. On Wednesday, July 9th at 9:30 a.m., we'll get the latest crude oil inventories report. This is important because it gives us a snapshot of oil supply in the US, and any unexpected increase or decrease can influence oil prices and inflation expectations. Later that same day at 12 p.m., we have the 10-year note auction. This is closely watched by traders because it can affect interest rates and investor sentiment about long-term economic stability. Then at 1 p.m., the FOMC meeting minutes will be released. These minutes give us insight into the Federal Reserve's thinking during their last meeting, and traders often look for any clues about future interest rate moves or concerns about the economy. On Thursday, July 10th at 7:30 a.m., we will see the initial jobless claims. This number tells us how many people filed for unemployment benefits for the first time, and it's an early signal of how the labor market is performing. A higher number could mean some weakness in the job market. Finally, at 12 p.m., we have the 30-year bond auction. Like the 10-year auction, this event helps us understand investor demand for long-term US debt, and it can influence long-term interest rates. All these fundamentals can create volatility in the markets, especially in currencies, bonds, and commodities. So it's important to keep an eye on how the data compares to expectations. Now let's move to the most important fundamentals of the week. Investors are showing caution, shifting large amounts of capital into cash and bonds. Last week, money market funds attracted $56.4 billion, while bonds saw $20.5 billion in inflows. In contrast, equities only received $2.2 billion. Bank of America warns that if the S&P 500 rises above 6,300 in July, it could trigger a sell signal, although the risk seems tilted toward a move to 7,000 rather than a major drop. Investment-grade bonds had their biggest inflows since 2020, while growth and mid-cap stocks saw significant outflows. Financial sector funds, however, saw their largest inflow since January. Bank of America's private clients increased their equity exposure to the highest level since 2022, while cutting back on bonds. Now shifting from market inflows to politics and policy, we turn to one of the most impactful legislative moves in recent US history. Donald Trump's One Beautiful Bill has officially passed both chambers of Congress, with Vice President J.D. Vance breaking a tie in the Senate and the House, narrowly approving it 218 to 214. The bill, 870 pages long, is massive in scope, reshaping tax policy, healthcare, energy, and education, and now is on its way to the president's desk. On taxes, it makes the Trump-era tax cuts permanent for individuals and businesses, eliminates taxes on tips, overtime, and car loan interest, and introduces new deductions, including $25,000 annually for tips and overtime. For corporations, it restores key credits for investments, property, depreciation, and R&D, giving businesses long-term clarity. However, the bill also phases out clean energy incentives faster than expected, removing EV credits by September 30th and scaling back support for wind and solar. In contrast, it boosts fossil fuel industries, even classifying coal as a critical mineral. Elon Musk has openly slammed the bill, warning it could damage the energy grid and hurt innovation. Healthcare provisions are also controversial. The bill cuts Medicaid spending by around $900 billion, which the Congressional Budget Office estimates will leave nearly 12 million more Americans uninsured by 2034, especially affecting low-income families and rural hospitals. Despite the backlash, the bill passed due to strong support from corporate America and the GOP's push for tax reforms and energy dominance. We now begin with the technical analysis. As always, we start by looking at the strength of the dollar, especially the DXY index. It's important to understand the movement has taken place over the past week, especially since July 1st. We have seen a price action that suggests a potential recovery for the DXY structure. If this developing structure continues to hold on the chart, the price will likely aim for the 97,600 area, a level that remains untested due to a vacuum block that formed at that point in the chart. So the targets we can outline for this week should be oriented toward a possible bullish move. The first target for the week is around 97.422, followed by a second target at 97.498, and finally we could expect a move toward the vacuum block zone I just mentioned. If price manages to break through that area, and we are talking about this kind of move, we could then look toward higher bullish objectives. We start to talk about this area located at 98.201 or even 98.836. While we are analyzing a bullish move with a high probability of continuation, it's important to recognize that there are still areas of liquidity left behind at lower levels. This means that zones like 96.689, 96.621, where we can see another liquidity zone, or even the swing low at 96.377 are areas where liquidity remains available, and price could dip temporarily just to grab that liquidity. From my personal perspective, and taking into account the possible impact of macro fundamentals coming from the White House, we could expect a continued recovery. Let's continue with the S&P 500, and as we can see, the price has reached one of the targets we previously outlined, specifically around this area located at 6,198. In recent trading hours, the S&P 500 has continued its upward movement. It's also important to note that the last trading session took place on Thursday, since markets were closed on Friday, July 5th, due to US holiday observances. For now, we can still consider that the S&P 500 may remain bullish, given that the current market structure is still showing upward momentum. However, we also need to take into account the latest macro data, especially from what's being referred to as the Big Beautiful Bill. This could trigger a meaningful correction, especially considering that the data was released over the weekend and the market hasn't yet reacted. This makes Monday a critical day. If a bearish reaction does occur, we could expect the price to move toward key liquidity zones, 6,042, 5,943, or even the 5,767 level, where the market may find demand and potentially bounce back to the upside. On the other hand, if the bullish momentum continues on Monday, which I see as less likely due to recent fundamentals, the next upside target would be around 6,291. That level is just about 10 points above the current price, so we may be nearing the top of this leg. Because of this, we need to be aware that the price could form a local top around that level. From there, a pullback or correction could take place, potentially offering new trading opportunities. Now we move on to the Euro-USD pair. Given its well-known inverse correlation with the dollar, we've seen a clear correction throughout the past week. The euro has fallen from 1.18 level down to 1.17. At this point, we need to evaluate whether the euro can regain bullish structure and continue moving higher. If that bullish scenario fails to hold, if the structure weakens, it becomes absolutely crucial that the price does not break below the 1.16850 level. A break below this area could signal a shift in market structure, potentially opening the door to a stronger downward move. To confirm such a breakdown, we would need to see a strong bearish candle, one with a full body that closes clearly below that level that we are talking about. This would indicate a potential continuation of the bearish move and possibly a deeper correction toward entry zones, maintaining bearish pressure. Such a scenario would not be favorable for those currently holding euro positions. If this move unfolds with strong momentum, we could expect the price to drop toward fair value gap, with the most likely reaction zone located around 1.16455. A final downside target to consider would be 1.15903. On the bullish side, we can still maintain last week's upside target at 1.19. And finally, we can now also propose a new short-term target based on the recent swing high, which is located at 1.18299. Now, turning to Bitcoin, we've seen a much more volatile scenario with strong price movements, yet within a very defined range, as you can see clearly here. This range is a classic consolidation zone that usually indicates that whales could be accumulating Bitcoin, preparing for a strong move in the near future. If we stick to the structure we have been analyzing on this channel, the most likely scenario remains a continuation of the bullish trend. As long as Bitcoin holds above 105,000 level, the price could push higher, targeting 110,651 and potentially breaking the all-time high near $112,000. On the downside, if bearish pressure appears this week, key support zones to watch would be 105,119 level, 104,075, which is, by the way, related to this fair value gap located here. Next, the liquidity zone that we can see here, located at 99,677. And finally, the last zone that is actually related to this liquidity zone, located at 98,225. If you found this analysis helpful, don't forget to like the video and subscribe to the channel for more weekly insights. And if you are ready to take your trading to the next level, register today at xChief.com. xChief provides advanced tools, tight spreads, and professional support to help you navigate these volatile markets. Thanks for watching, and I'll see you in the next analysis.